And Asian markets take another beating in overnight trading as they follow the U.S. markets in the fourth consecutive day of triple-digit decline.
You're killing me.
In other news, the semiconductor index has
killing me.
moved below its 200-day moving
Honey,
average. What?
let's go to sleep.
Sleep. Have you seen the markets lately?
I'll get your Cialis.
Cialis. Have you seen the markets lately?
So let's get out of the market.
Get out. You can't just get out of the market.
But it's down.
Debbie, it's not called down. It's called a buying opportunity.
Okay, so let's buy.
Bye-bye. Have you seen the markets lately?
Yeah, they're like casinos. Let's put our money in T-bills, honey.
We can't retire on T-bill income. We can live to be 90 or 100.
That's bad?
Well, it depends. We need to generate 6 to 7% a year reliably so I can get some sleep.
How hard can that be?
Have you seen the markets lately?
The price for a barrel of oil has dropped to the lowest level in 5 years. Economic conditions have continued to slide despite the best efforts of the G8.
The stock market scares me. The whole economy scares me. It's like we're all living in a nightmare. Okay, so explain this REIT thing. Slowly, in plain English.
From an investment portfolio management perspective, can you articulate the nature of a non-institutional investment in a diversified real estate platform?
He means, what's a REIT?
It's actually pretty simple. A REIT is a company that owns or lends on commercial real estate. Usually, it's real estate that produces income.
Like an office building or a warehouse?
Or hotels?
A retail?
Apartment buildings?
Self-storage units?
Well, those are the 5 basic food groups in which REITs invest. The investment can take the form of either debt or equity. That is, they can own the properties and collect rent. Those are equity REITs. Or they can lend mortgage money to developers or owners and collect interest payments. Those are mortgage REITs. Or the REIT can both own and lend, which is referred to as a hybrid REIT. The important thing to realize is that a REIT is simply a tax election. If you, as a real estate investment company, elect to be treated as a REIT and comply with certain rules, then the REIT does not pay corporate income tax.
Cool. Well, I can say cool.
Well, in that way, when a REIT pays you a dividend, it's only taxed once on your tax return as dividend income.
So how is that different?
Well, if you own, say, IBM stock, the net income of IBM is subject to corporate tax. And then when IBM pays a dividend, that income is taxed again. There's no double taxation with a REIT.
So what kind of rules does the REIT have that makes certain that it avoids this double tax?
Well, there are several, but the main rules relate to the percentage of assets invested in real estate, 75%, and the percentage of gross income it must derive from rents or mortgage interest, also 75%. In addition, the REIT must have at least 100 shareholders, be managed by an independent board of directors, and most importantly, it must pay its shareholders dividends of at least 90% of its taxable income.
Okay, I understand now. So what's the difference between a publicly traded and a non-traded REIT?
Does non-traded mean not public? What are they trying to hide?
No, they're not trying to hide anything. Both the publicly traded and non-traded REITs are public companies, and they must file reports with the SEC like any other public company. A publicly traded REIT is listed and traded on an exchange, just like IBM.
Oh, that's bad.
Well, you can buy or sell it anytime you want. It's very liquid.
That's good.
But so can everyone else, so its price can go up or down, just like any other stock.
That's bad.
But a public non-traded REIT, and also private REIT for that matter, aren't traded every day.
That's good.
And that depends on your priorities. Because the non-traded REIT is not listed on an exchange, its share price does not move, which is nice in this volatile market, but there are limited options to sell the stock.
Well, shouldn't I get something for tying up my money? Or as you would put it, lack of liquidity?
Yes, I mean the percentage dividend return is typically greater on the non-traded REIT stock relative to the publicly traded REIT.
So in a compare and contrast analytic environment.
So what's better, a non-public or a publicly traded REIT?
I can't give you financial advice, but I can tell you this. If you had invested, say, $100,000 in the S&P 500 stock index 5 years ago, you'd be down. If you'd invested in an indexed portfolio of diversified public REIT stocks, you'd also be down. But if you'd invested in a public, non-traded REIT paying, say, a 6.75% dividend, the stock price generally remains constant, you'd be getting a regular dividend check, and you would have earned about 35% by now.
Oh, that's good.
It's very nice.
Okay, now let me just ask you straight out. Everything is tanking right now. Who knows how much lower things will go? Does it make any sense to invest in real estate now?
Yes.
We were expecting a longer answer.
Well, we think this may be a great time to invest in real estate because first, in a market like this, you want to diversify, and REITs are not directly correlated to stock or bond performance. Second, an investment in real estate may enhance your ability to build wealth over the long term.
Prove it.
She's tough.
You think?
All right. If you'd invested $10,000 in 1975
I was 10.
and put half in stocks and half in bonds, today you'd probably have about $260,000.
Oh, not terrible.
But if you'd invested 50% in stocks, 40% in bonds, and just 10% in publicly traded REIT stocks, today, 33 years later, you have about,
More?
over $300,000. And if you diversified into 45% stocks, 35% bonds, and 20% publicly traded REIT stocks, you'd have almost $370,000.
Wow, that's a 40% increase.
You're good with numbers.
Okay, so on a total return basis, with a 10-year horizon and marginal tax rates on both ordinary income and capital gains income increasing, what's the outlook going forward? Oh, more tea, boys?
The recession has entered its 7th month as markets continue their wild gyrations.
You don't scare us anymore. We've got a steady stream of reliable income that lends stability to our investment portfolio.
Okay, great.
Wow. Ever since we invested in that public non-traded REIT,
I'm unburdened, I can breathe, I can sleep again.
you're like a whole new person.
You mean a whole new man?
Look at your Cialis. Honey? Well, at least you can sleep again.